Hi, my name is Dan Meyer, and in today's video we are going to talk about how to multiply your profits by 10 times. Now this is really going to be important for those of you who are starting out with a smaller trading account, because it's going to allow you to make more money on less money invested, and it's also going to allow you to grow a small portfolio into a bigger portfolio much faster. So this is real important, so pay close attention, and let's just go ahead and get started right away. So let's start out with just a regular stock trading example. Let's just say we have a stock that's trading at $100 per share, and we are bullish on this stock. We think it's going to go up, so we want to buy 100 shares of stock. So 100 shares of stock times a stock price of $100, that's going to cost us $10,000 to get into this trade. Now, I know a lot of you are thinking that's a lot of money. This is going to be prohibitive for a lot of people, because most people just don't have $10,000 to get into a trade. But for the sake of the example, just follow with me here. So we're into this trade. It cost us $10,000. We bought here at 100, and let's say we're in this trade for 6 months, and sure enough, we were right. The market went up, and in 6 months it's trading at $110 per share. So we've made a $10 per share profit. So we have our 100 shares times a $10 profit is going to equal $1,000. $10 per share times 100 shares, $1,000 profit. That's going to be an ROI, or a return on investment, of 10%. Okay? So now, how could we make more money on this type of trade? Well, instead of buying 100 shares of the stock, let's see what happens if we were to buy a call option. Now, most people would buy the at-the-money call option, or the $100 call option, because the stock's trading at 100, so they would buy the $100 call. So let's buy the $100 call, and an option is for 100 shares of stock. So one option contract controls 100 shares of stock. So when we buy one $100 call, we're going to control 100 shares of stock. And let's say we have 6 months of time on this option, and it's going to cost us $500. So the premium on this option is $500. Now, same example applies. The stock went up $10 per share. So we have $100 times 10 is going to equal $1,000. So in this example, it cost us $500 to get in. Instead of $10,000, we made the same $1,000. Now, we have to subtract the price we paid for the option. Because we bought the $100 call, that was at the money. The option that we bought was made up of all time value. We had 6 months of time. 6 months have passed. Now there's no more time on this option, so it's worthless. The $500, or the time value is worthless. The $500 is gone. So we're going to have to subtract $500 from our $1,000 profit. So we're going to make $500. But it cost us $500 to get in. So $500 profit on a $500 investment, that's an ROI of 100%. So we can see, by buying the option, we have an ROI of 100 instead of 10. But now here's the thing. This example is not 100% fair, because up here we invested $10,000, and here we only invested $500. So what if we invested the same $10,000 into buying options contracts? Well, then we would be able to buy how many options contracts at $500 apiece for $10,000? 20. 20 times 500 is 10,000. So we would have 20 option contracts. Now, 20 option contracts controls how many shares of stock? 2,000 times the $10 per share is going to equal, $20,000. So if we were to buy the shares of stock, it cost us $10,000, we make $1,000. If we were to buy the option, we would get 20 contracts, that's 2,000 shares, that's $20,000. Now we're gonna have to, again, we're gonna have to subtract what we paid for the option. So 20 times 500, we're gonna have to subtract $10,000, which is gonna give us a total profit of $10,000 on this trade. So we invested $10,000, we made $10,000, that's 100% ROI, and that's 10 times what we would make up here. Up here we make 1,000, down here we make 10,000. Now, I just want you to get this concept. If you want to start trading options over stocks so you can make higher returns, you need to learn two things. You need to learn first options basics so you understand how options work. You also need to learn which option to buy, because in this example, we bought the $100 call, which is, I bought that for the example because that's what most people would buy, but this is actually the wrong option. If this was a real life trade, we would not buy the $100 call. We would buy a call that was in the money, because when we buy, the 100 was made up of all time value. We had to subtract that from our profit. We had to subtract the 10,000. If we would have bought in the money like we should, instead of subtracting 10,000, probably of that 10,000, 6,000 would be intrinsic value. Intrinsic value you don't lose as time passes, so we'd really make more like $16,000. So buying the right option, and it's not just here, anytime you're buying an option, you need to know the right option to buy. That can be a little confusing. So I've put together a 6-point option buying checklist that's going to show you, it's going to take you step by step to show you which option to buy. So if you want that option checklist, I'll include a link right up here for you to get it, or I'll include a link in the description of this video. So grab that option checklist, because when you're buying options, you really need to know the right one to buy. So that's pretty much it. This is how you do it if you want to get a much higher ROI, and if you don't have a lot of money to invest, you can still get into these trades for a lot less money. So I hope this video helped you. If it did, do me a favor and hit the thumbs up or the like button. Also, if this is your first time here, I'd love to have you subscribe to my YouTube channel. I do videos just like this every week to help you become a better and more profitable stock trader. So like, subscribe, and make sure you grab a copy of my options buying checklist so you know which options to buy. So click on the link, grab a copy, and I will see you next time.